Hey everybody, this is David Skrika. So this is the stock chart of the day for Monday. Um, I think it's the 17th, of July. So I'm recording this on Thursday the 13th because I wanted to pre-record some of these before I fly out to Spain. I kind of want to enjoy, my first weekend in Spain. I will be doing some work while I'm there, but I just wanted to do this. So I'm going to get into it. This is not going to be a long one. Stock charts of the day is supposed to be, short and quick anyhow. So today our stock chart of the day is not actually this. It's actually the strategic oil reserve. So what we can see is this is a reserve, made, basically for emergencies to release if there were shortages, if you're in war, et cetera, et cetera. But we can see almost half of this reserve, which was over 700 million, actually more than half, more than or nearly 700 million barrels. Actually, I think it was close to 800 million, so it is more than half in 2011, and slowly came down under Trump and Obama, to about 650 has been released, and now we're at 340. This is the lowest since 1983, and much of this was acquired in the 80s, when oil was $10 a barrel kind of thing. So we can see that a lot of this, and much of it was accumulated, at cheaper kind of oil prices. So they have now sold over 275 million barrels in the last 2 years, roughly 40% of the reserve since then. I think this is being done for political reasons, keep oil prices down for the midterms that just happened, and now for 2024. And obviously, with Russia's largest source of income and revenue stream, the Russian government, coming from oil, and with U.S. opposing Russia with the war or invasion of Ukraine, they're doing this to try to keep Russia down as well. So that's my personal opinion here, and that's why I think this is being done. And I think it will ultimately fail because now with lower prices, if the price is staying in the 60s and 70s, there's no other exploration going down. The number of rigs outstanding in the United States is now roughly 30% lower than it was at the peak pre-COVID. So there's no, the lower prices are keeping, people from drilling and whatnot. So then when you have the combination of this having to be not only stop being sold, but then replenished, which adds demand to the market. So you'll have that added demand, plus you'll have the not as much production going on. I think it's going to set up for a big rally in oil sometime over the next few years. Now, if there's a bad enough recession, that could a deep enough recession that could hurt it. But we can see this is a nice looking chart. Oil had this short-term resistance here around the low 70s, has broken it. You can see it's getting back towards the 200-day moving average. I'm big on those 200-day moving average. You can see that here in the rally last August, these bounces here in October, November, this bounce here that happened in March, the 200-day acted as resistance. So if we break through 77, which we're basically only $2 away from, that will break the 200-day and could reverse the uptrend. And we can see this 82.50 here or so did quite break it here. So let's say 83. If we break that 83, then it really looks like we're off to the races and could go back to 100. And if we kind of look at it like a longer term chart here, like a 5-year chart, you can kind of see this. Could it be like this, sideways before it fell apart? It fell apart because of COVID, right? So and lack of demand for the few months when everything was locked down. But this kind of looks basing to me. And if this is basing here, like I said, you break through that 80 to 85, it looks like you could head back to the highs of the Russian war. And of course, with the dollar, as I said yesterday, now rolling over. By the way, this was my most disliked video ever. Not a huge amount, but I had 4 dislikes on it, which I found interesting that I'm talking negatively about the dollar and some people didn't like it. Sorry, I did this last Wednesday. I thought that was interesting because usually I have no dislikes on my videos, or maybe like one. You can see your dislikes in your YouTube account. But anyhow, so with that rolling over, of course, the dollar going down usually means commodities go higher. So this will be really interesting to see if this is just a consolidation, if it's similar to what happened here in 2020 before we have another big run higher. But again, if the economy doesn't fall off a cliff, you're looking at, less supply on the market, because of, less drilling going on. Less supply because they'll stop selling the strategic reserve, and then more demand because they're going to have to buy that strategic reserve back. So I think this is a big disaster. I think it's a political mistake. And it will just be interesting to see. And, there are a couple stocks we bought. One I really like is, and maybe I'll do this in another stock chart of the day, make that company the stock chart of the day, is Athabasca, ATH, on Toronto. Disclosure, my family owns it. It's a small cap producer in the oil sands in Canada. It trades at like 3 times earnings. It's one that I really, really like as a play here. So, and I'm going to leave it at this right now. And I hope you enjoy these stock charts of the day. They'll still be coming from Spain. Actually, now that, by the time you see this, I'll be more settled in Spain. It's kind of nice because I'll be able just to when I get up at whatever, 8 or 9 in the morning in Spain, or I do these at 8 or 9 in the morning, it's going to be 2 or 3 in the evening, or sorry, 2 or 3 in the morning back home. So these will all be out, and, you can, if you want to have your morning coffee and watch this for 5 minutes, you'll be able to do that. So everybody take care, and talk to you later.